Welcome, everybody. Welcome, traders from Dubuque to Dubai and all the points in between. Welcome to the Trading Battle, the show on the internet that trades for real money, real charity, with real traders, and for fun and benefit. And hopefully you guys are going to enjoy it. We have an amazing show today. Today I have two superstar traders, Blake Morrow and Austin Silver from Austin Silver FX. Hi, guys. How's everybody doing?
Good morning, well. Good to see you, boys.
They already
ready to go. We got the gloves. Let's do it, Blake.
We got the gloves out. Absolutely. No, both of these guys are veteran traders. They've been around the markets for years and years and years. Let me tell you a little bit about them each. So Austin is a man who could have been a bum but became a contender. I see what I did there. He actually is an incredibly storied, very interesting background story. Austin had left college, or just I don't think he ever he skipped college basically because he has such an interest in finance and entrepreneurship. And as many of you know, he's an incredibly prolific trader and a content developer. He's got a very, very active YouTube channel and a great podcast, the Day Trading Podcast, which is I've been fortunate to be a member of it. Great resource for those of you who want to understand trading psychology, trading strategies, and just conversations with traders. It's a really, really awesome podcast that he does that I ask you to follow. And of course, he is the founder of Austin Silver FX, which is a service that helps traders in a whole bunch of different ways, both from trading their own accounts and trading their prop accounts. And of course, both traders, by the way, I have to tell you, are trading today with our favorite broker, ACAP. They're going to be executing on that platform, which carries a wide variety of instruments, I think up to 800 instruments, everything from FX to CFDs to commodities to crypto. So a great trading platform, and they're all going to be both executing it. And in the right corner here, who we've managed to wake up at 4 o'clock in the morning. He's been a real trooper, coming to us all the way from Arizona on the West Coast, is Blake Morrow, who is a very, very seasoned trader. He started his career at Wise Trade. I think has traded everything under the sun and under the moon at this point. And of course, is the founder of ForexAnalytix, which is the preeminent analytics platform that basically does a tremendous amount of analytical work, both on the chart-based side and the fundamental side across currencies, indices, and all the tradable assets. Great idea, a great place for idea generation and analytics, and a platform that that I've used many, many times before. So hi guys, welcome to the show. Good to see you. How's everybody doing? Everybody enjoying the summer so far?
Well, Austin's in Florida. I'm in Arizona, so we're both dealing with probably a lot of heat right now. Boris, I just want to clarify something really quick. I did not start my my career at Wise Trade. Actually, I started my career as a stockbroker in 1995, but opened a brokerage firm in '99. I was a day trader at Block Trading, and then we eventually sold to the Wise Trade Group in 2002. And so there's about 7 years ahead of that.
So what you're telling me is that you're older than I even made you out to be.
Yeah, I was going to say, let me clarify.
I'm 52
I was born
this
in
year,
1995,
so
Blake. So this is good.
Exactly. No, it's okay. It's all about wisdom at this point, right, guys? Speaking of wisdom, I mean, I kind of want to talk to you, both of you guys, about the state of the markets. We're in I think a sort of a very interesting, perhaps a transitionary phase. I don't know what you think about this, but the great sayings, sell in May, go away. I think it's starting to play itself out. I mean, we hit the highs, but we're really starting to bump up against the ceiling on the equity side, and also just on the risk side. I mean, gold, everything seems to have slowed in the last month as far as progress goes. What do you think, Austin? How's your view of the markets?
I think gold is a great example of what happens when markets take a strong move. They need to take a breath. I know Blake could speak on this too. Gold made a big move already in the last 12 months. So how much more can we really expect out of that? But I think overall with U.S. markets, because you and I both trade U.S. indices, Boris, I take notes from you and other people that are more experienced than me. And a lot of people have told me that U.S. markets really need a catalyst to go lower. It doesn't necessarily just happen. And that's due to inflows just into U.S. markets. So until that catalyst comes into play, maybe it's the China-Taiwan thing, maybe it's the semiconductor bubble, if we're in one. There's got to be something that gives in order for me to get bearish. Otherwise, I don't disagree with you that we're bumping against the ceiling, but I'm also not thinking it's going to be. I'm not Peter Schiff here predicting the end of markets. I'm not right.
Well, please, I hope nobody is ever Peter Schiff.
Right.
Blake, what do you think about the idea of semiconductors? NVIDIA's capitalization is now greater than the whole DAX 40, which is an astounding statistic. I think, you and I are both old enough that we remember, like, when the real estate around the Japanese Imperial Palace was worth more than California.
Yeah,
now the yen, it's 155 to the yen, and everybody's flying to Japan because you can buy $10 sushi over there. So,
and look, Boris, we're in really unique markets right now, and you're right. We're at levels that don't make sense on a lot of different levels. It does harken back to, you remember very well, the .com era, and I traded through the .com era. It started on a trade desk in '97, so I've traded through the whole .com era, and it was the levels can stay lofty for a long time. I agree with Austin here. There tends to be a catalyst. The one thing that I'm kind of happy about that we haven't seen thus far, and I was thinking we might see it, but it hasn't transpired, and actually looks like we might be forging some sort of top technically. Now, as Austin mentioned, I think we do need a catalyst. The one thing that didn't happen is we didn't see some sort of blow off top in the markets. And that's not something that I really want to see in equities at my age, because once you get some sort of blow off top in the market, you tend not to revisit those levels for a while. So Boris, we're at those, golden years of our trading career, and we don't want to see equities peak for the next 20 years. At least I don't want to. So,
well, actually, that's interesting. So, Austin, this is an interesting point that Blake is raising. Unfortunately, both of him and I are old enough to kind of remember those times. The bad thing about the blow-off tops, obviously, the fact you have massive capital destruction, people lose lots of their savings, takes a long time to recover. But from a trading point of view, what's really, really terrible about blow-off tops is that liquidity absolutely evaporates. The movement that we depend on every single day for trading, day trading, scalping, just kind of disappears, and markets do nothing. And when it's 10 ticks up, 10 ticks down, you might as well just blow your brains out.
Play golf,
metaphorically, because it is an impossible environment to make money day trading. So I think that. What do you think about that?
Well, I think it's important for younger guys like myself. Personally, I remember many, many times, and I've been burned many times as markets have moved higher, not necessarily in a blow off top, but it's very easy and sexy to predict the top and say, oh, we've got a crash from here, blah, blah, blah. But it doesn't make you money. You miss beautiful bull runs. So one of the things that I've really focused on in the last 2 years is when we break out for a new all-time high, or we are in a bull run, take advantage. Don't worry about calling tops. When the market does decide to get slow, like you said, be aware. And I think this is where being really good at drawing levels and understanding ranges comes into play. And I've gotten a lot better at that. But if you can identify the range, like you mentioned, and avoid getting stuck in it, if you don't trade it well, go play golf. It's good to have another hobby. We were talking about golf before we started the stream. I'm big into golf over the last 2 years. I'm actually even watching golf. I used to be like, who the hell would watch golf? Now I get it. On a Thursday, if markets are in a range, I'm going to put ESPN on and I'm going to see what Scotty Scheffler's doing or whatever, because I don't want to get caught in that range. So I totally understand where you're coming from.
It's a really interesting psychological hack where, one of the things about trading that is very different from every other activity is every other activity, the more work you do, the more productive you are, the more money you make. Trading is actually quite the opposite. The less work you do, the less trading.
Well, dude, how many times have you overtraded yourself? You've been up in the morning, traded the afternoon, and given it back
every single day of my life. So
that's what I'm saying. So it's self-restraint. It's something we all as traders have to practice.
Correct.
I'm gonna agree, but I'm gonna disagree to a certain respect. I always have something going in the market. And the reason why I always have something going is, and I call them feeler trades, is because it keeps me having a pulse on the market. If I go flat, completely flat, it's kind of, trading's not, to me, at least this is to me, and different traders may find a little different here. But I like to have feelers out in the market. I always have some sort of exposure because it keeps me in touch with the market. a market is not like riding a bike. You don't, you can pick up a bike after not riding a bike in 10 years and you're like, oh, I get it. Trading's not the same way. If you lose touch in the market at all, it takes a while to re-engage yourself. So as long as I have a little bit of exposure, I'm always keeping one eye on the market, and that's what I tend to do. Now, that doesn't mean I'm overexposed. It just means I might have an 8th size, quarter size positions running on dollars or
exactly
along the SPUs or whatever,
Right. Yeah. I will very often, if I'm day trading, for example, futures, if I don't have any conviction on a trade, or if I just want to try out a trade, I'll trade the micro contract, which is 1/10 the size. Basically,
I think that's one of the differences too, though, right, Boris? Is like, because you and I are both trading futures, where Blake is trading a lot of currencies. He can run these positions overnight, over the weekends. We get, especially if you're trading prop money like I am, you're getting every day. You've got to be flat at the end of the day, and you can put the position back on overnight. But I totally understand your point, Blake, 100%. But I only trade one asset, Blake, so it's a little easier for me if I'm only trading ES predominantly. And that's what I've been trading, to stay in tune with that, even if I can't run a position. But I get your point 100%.
Right. But his point is, I think it's a really good point, that if you're not in it, you can't win it. It's
100%.
You do tune out,
especially in currencies, dude. Especially
because you need a skin in the game. You just need to.
Well, and maybe this is where it differs from trader to trader. If you are trading just prop money and you are, let's say, just a day trader, you need to keep your book flat at the end of the day, or you need to keep your exposure really low. For me, I try to take more of a macro approach, more of a swing approach to the markets.
Yep.
Because I'm trading my own capital, and so therefore I'm trying to capture a bigger move in the market longer term. And me engaged in what I'm doing in the FX market keeps my macro baseball cap on at least straight.
Yeah.
So it's different approaches to the market.
Before we get going in the first challenge, Boris, I have a question for you guys. I'd be curious. I think the audience would want to know. Do you guys think the prop space, these funding companies, are going to steal from the traditional brokerage that you guys are trading with, trading your own capital over time? I'm thinking that the younger generation, people younger than me, are going to want to trade prop almost more than they're going to want to trade their own money. I'm curious to hear what you guys think.
Honestly, I think so. My answer to that is it's all going to collect into one same thing. In other words, prop will become brokerage firms, and
brokerages will have prop.
Will become
interesting.
I think the natural cycle of life these days, and of course, it's very different. Yes, an older customer, so let's say a customer, let's say 40 years of age or older, is much more likely to be trading their own account because they obviously have capital. And of course, trading your own account gives you enormous amount of flexibility, far more flexibility than you would trading a prop account. The younger customer is going to start out with a prop account, build up money. If he succeeds, gets a couple of payouts, use that money then to trade their own account, because then they want the flexibility that they learn. I think that's going to be the cycle. What do you think?
Well, we run a prop firm, and my son's he's trading prop count. So that pretty much just. You are the demographic. You live the demographic. Yeah. I do, and so that's why I believe, and I believe they will come together at some point. And you'll see more of these firms that will offer some sort of prop trading, and which I think is great. It's a great option that wasn't available when Boris and I started trading. I actually found an investor in the 90s, so that was how I got started, and I think everybody should have that opportunity. It isn't and wasn't right into Wall Street.
I'll have more questions about that a little bit later. But in the meantime, we got to get out to our first challenge now.
Yeah, let's do it.
The first challenge is for everybody to pick a dollar-denominated pair that they like, their best dollar trade going forward in the FX space. Now, I know that Blake had just closed out dollar MEX. He was super bullish on that ahead of the Mexican election. We talked about the fact that Blake has been I guess it's partly because you're close to Mexico, but generally he's been a big bull. He's been a big bull on Mexico for a long time. So that trade has just been a massive winner. Mexico as an economy, I think, is becoming a truly great bet by investors. If you think about it, I think, tell me if you agree. We're getting to a point where the whole North American market, and North American market is Canada, US, Mexico, becomes a single unified trading block that can then truly challenge China and also provide products for Europe as well, and of course service Latin America. I think that'd be super interesting. And I just generally think that all of Latin America, with Milei's election in Argentina, becomes a very, very interesting interesting story over the next couple of years. Capital markets are going to open up. I think you're going to see a lot more freedom, much more capitalism, much greater unleashing of possibilities in Latin America. What do you think about that?
I'll let Austin jump in here too, but I do want to say this. I had an aha moment. It was about 3 years ago. It was right after like the COVID lockdowns, and everybody was out playing golf quite a bit around here. And I played golf with a gentleman that moved 300 employees, basically 300 positions, not all employees because he didn't bring them all over from China. His operation from China to Mexico. And he just got finished doing that. And this was 3 years ago. And that to me was an aha moment. And he was like, I saved so much more money. And it was a semiconductor. They do like some smart chips for like mobile devices and whatnot. And it was a medium-sized company. And that was, like I said, it was my aha moment. So yes, Boris, I 100% agree that Mexico is going to be a beneficiary. The problem that was this weekend was the new president. She's going to have control of the Congress or a majority. And so, a lot of old AMLO policies might actually get into play. And so I think it's freaking out some of the carry traders, the ones that have been short pesos for a long time. I think you're going to see a little bit of a rebalance near term in that. So
okay, well, let's hope capitalism reigns and capital markets are unleashed in Latin America, because I think if they just simply allow that to thrive, and you're starting to see that, because I think the population in Latin America is just sick and tired of the statist corruption that's been going on there for thousands, for hundreds of years. So if they could just unleash the power of the people there, I think it'll be an amazing place to invest in all across the market. What do you think, Austin? I don't know if you have any views on Latin America, or Mexico in general, but your general thoughts about any of this.
I wouldn't give too much of an opinion on that, and that is where I would defer to Blake. He is definitely the expert here. I do think it is interesting to see how impactful an election can be to a currency, which almost shows it's like that. How the stock market, they say, is forward looking. Well, so is the currency market. Right. That's what this move that Blake just capitalized on is telling me, is that the market was, for better or for worse, depends on who you ask, was pricing this type of a move in, or was anticipating this to be potentially either, again, depending on who you ask, good or bad. Do you think it's good or bad news for Mexico in general, Blake? I think it's probably good news, right?
Yeah. It brings less stability to the Mexican strong peso thesis and the stability, at least near term. That's why, like I said, you're seeing some Mexican peso weakness in the near term. You're seeing the biggest trade, and Boris, you would know this, the biggest trade in the FX market, carry trade wise, has been, selling MEX, or buying MEX and selling everything else. So Mexican peso yen, right?
Right. It's been good. Speaking of carry trades and speaking of positionality, what do you guys think? I mean, where is your dollar trade for the next week going to go? Are you guys going to go long euros? You guys going to go short euros, dollar yens? What do you? Let's everybody. I'm going to let Austin make his bid, and then we'll have Blake make his bid. What do you think?
I'm thinking dollar yen, and here's why. We've had a couple of rejections, of course, of that 159, 160 area due to the Bank of Japan intervening. I like the longs going into today, considering we've had this 2-day down move. The reason for that is I like to use this website Edgeful, which provides statistical data on certain assets and stocks, Forex, and futures. And according to them, on dollar yen, the average green day streak for dollar yen over the last year is only 2.2 days. But the average red day streak is 1.5 days. So we've already now had our 2 red days, which is over the average. Now, our max consecutive red days is 6. So, of course, I could be wrong trying to buy this little dip here, but I think there's going to be some buyers that step in on dollar yen around the 154, 155 level. So I'm thinking I'm going to be long dollar yen, trying to catch a little bit of a reversal going into Wednesday, Thursday, Friday of this week.
Right. You know the old joke about averages. Bill Gates walks into a bar full of dock workers, and suddenly everybody is a millionaire. The average customer is a millionaire.
There you go. That makes sense.
Yeah. Okay, so you're gonna kind of trend this. You're gonna buy the dip here in dollar yen. Let's see how that plays out. It should be really
also one more thing I'd add. I mean, I use average daily range 2 days now, blowing through average daily range. At some point, I would hope this thing catches a little bit and we can see a bounce here.
What's that? Is it a EMA over there? What is that? What is
this?
This
is the black line is a daily VWAP at change of day, telling me who's in control right now, buyers or sellers. We're underneath it, so sellers are in control. But the fact these green lines here, that's my average daily range. When we've extended outside of those green horizontal lines, that says we've moved more than we have over the last 5 days if it was an average.
Right.
So two big extended moves to the downside.
Certainly see it's very extended, and there's a possibility of a double bottom there if it holds those lows.
Yeah. And also, if we're looking at a swing trade, I don't want to be too caught up on a 15-minute chart. I want to look at something a little higher. Swing trading is not my forte, but I could definitely see us catching maybe even just a 155.60, 155.80, something back towards this daily VWAP, back towards yesterday's low, something like that.
Sounds good. Okay. What about you, Blake? What are you thinking?
Well, I'm gonna actually take the opposite side of that, but not in the dollar yen. I'm actually going to be trading the euro dollar. But the one thing I want to mention a little bit about the yen, you'll see a really big move in the JGBs, and this is the 10-year JGBs, and you can see this really big move today. And you have to be a little careful with this, Austin, because one of my colleagues this morning, just about an hour ago, he said that the BOJ expectations to cut down JGB buying is really one of the things that's keeping the yen quite bid, at least today. So it's just a factor that I think if you're trading yen, you need to know. But I'm actually going to take advantage of the euro sell-off today, and I'm going to get long. Now, let me explain a couple of things for you really quick, and I'm going to do a little bit of drawing here. We're in a very, very tight triangle, longer term in the euro and for the dollar as a whole. But the euro dollar just rejected the basically the 109 level, and it got caught some Asia just taking advantage of the move above 109. But I'm not really so worried about that. What I am going to be looking to do, and this is not going to be indicative of what I'm going to do here today, I'm going to get long some euro dollar because I'm expecting US data to start to really weaken. You saw ISM yesterday. ISM tomorrow, the services sector is going to be extremely explosive, maybe even more so than non-farm payroll. Plus, we've got JOLTS jobs reports today. We've got weekly unemployment claims. All of this economic data should start to weaken the US dollar. Therefore, I'm going to take advantage of this little pullback in the euro. And then, just so you all know, break above this 618 retracement or the 109.30 level, I'm actually looking for a move to eventually take us above 110. So what I'm going to do today is I'm going to buy this euro dollar, and I'm going to start with a full lot position, and I'm going to just put my stop not there. I'm going to put my stop below the 200 DMA, which is about 107. Let's just say 63. But I'm actually looking for a move well above 110. But I'll put us up at 110 just to take profits because between now and a week from now, I won't be around. We won't be here with you. I think there's a
make sure your stop loss is all messed up. I think this says 1.1 pips there.
Oh, there we go. Let me why did I do that? Let me go. Oh, probably because I was typing in the number. I need to put in the price. That's what I need to do. So 107. Thank you very much. That would have been silly.
I'm a master of analysis and a failure of execution, so I'm well aware of.
This is since I trade directly through my platform, this is new for me. So there we go. All right. So I'm just going to put that in. Although I just want to let you guys know, and the trade's live now. But above 109.30, I would actually be doubling up on my position and seeing how price reacts around 110, a break above 110, and I'm actually looking for a move.
So that's interesting. So you actually just to understand your process, you actually scale, you add to the winner. Is that what you said? You're going to double up on the position if you want.
Of course I do. Yeah. Well, I'm gonna press. I mean, because if you think from a Mac.
I'm just laughing because you said like it was the most obvious thing in the world. The reason I'm asking is because most traders do the exact opposite, which they add to a loser. you add to a winner. So that's the interesting process.
Yeah,
It's the right thing
there's
to do,
there's
for
an,
sure. You don't want to be adding to losers.
there's an old saying by oh geez, now
Fall to the
right off the top of
Jones.
my head.
Fall to the Jones says
losers add to losers. Losers add to losers. So.
Right. Okay.
And you know what? And I want to start by saying I want to stop really quick because I actually will add to losing trades if it's pre-planned. So everything has to be pre-planned. If I'm going to average into a position and I know like I'm buying a pullback, like let's say I thought the euro was going to pull back all the way to 108, I would say, okay, we're going to get towards 108. I might buy some at 108 and a quarter, 108.10. And maybe my last size is at 108, but all my stops are below 107.85. And I know that my maximum risk there, if all three positions got taken out, I'm going to lose, 1.1%. Great. Right. I've already pre-calculated that type of trade. That's fine. But in a momentum type of position, no, I'm leveraging up into a position looking for an extended target. Like in this case, I'm actually looking for a move into the 110s in the euro. So there we go.
Okay. All right. So let's talk a little bit about now the charities that you guys are trading for, right? Blake is trading for UNICEF, and tell us a little bit about why you chose that charity, and what is it? Why you really want to allocate money to that?
Well, okay. So first of all, I think UNICEF is a great organization. It's for me personally. But last time I put the Wounded Warrior Project, which is really near and dear to my heart. But I think Boris, you pulled up the Wounded Warrior Project, and it brought up an image that wasn't so. I think it was unappetizing for some people. So it still is in my head from the last trader battle. Yeah. So I thought I'd go a little bit more.
A great charity, by the way, and very worthy charity, of course.
Yes,
but it's always UNICEF, of course. Yes.
Yeah, being prior military, so I'll be going from St. Jude's to UNICEF to Wounded Warrior every time I do the trading battle. So there you go.
They're all really worthy charities, and of course, there's tremendous amount of work to be done. Lots of children across the world that need help, and they do. I still remember the little UNICEF boxes in school that we used to collect for. So it goes all the way back. What about you, Austin? What's the charity that you're trading for?
Habitat for Humanity. It's just something that I've done work with in the past. My father was a big supporter of Habitat for Humanity my whole life. That one and Big Brothers Big Sisters. So those two were just close to me because I spent time there with my dad.
Now, when you say you spent time there, did you actually help build houses?
No. We helped raise money for building houses. I would love to actually go out there and build something. Right. I've actually looked into, you can on your own, and I thought about, because of social media and stuff, I thought I could do this for less than 50K. You can work with Pencils of Promise and you can build a whole school. So I've thought about doing that as well. Maybe on the next battle, we'll do that. We'll see if we can do something serious. But isn't that amazing? For less than 50 grand, you can build a whole school in Nicaragua or something like that. So anything like that, I'm all for that. You know what I mean?
That is actually very, very cool. Yeah, all of that is just amazing. It's great stuff. Yeah. So I'm glad both of you, very worthy charities. You guys are valiant competitors. I know you're going to be very, very keen to win. And now we're going to introduce something a little bit more diabolical, something that we call the sabotage trade. Now, the essence of this idea, the sabotage trade, is that your opponent gets to pick the instrument that you will trade, gets to pick the direction of that instrument. But I'm going to make it even more diabolical, and I'm going to allow the opponent to choose not only the trade, the direction, but also the size. Now, remember, the size can cut both ways, because let's say, if you're wrong on your sabotage trade and you give your opponent large size, you're only basically increasing his potential for winning. So I'm going to give you 3 of those variables to think about when you are choosing trades for one for the other. And as we talk about that, what I really, really want to talk about ahead of this is non-farm payrolls. Of course, the granddaddy of all, coming up this week, this Friday as the big event. Perhaps, Blake has hinted at this, could be the pivotal event of the year so far, in a sense that, we've all been wrong everybody's been calling for a top in the labor market. Everybody's been calling for the top of the economy for the last 3 or 4 months, and every payrolls we're getting stronger and stronger. 200,000 prints continuously. Maybe this is the first time where we start to see sort of a sub 150 or sort of a weaker number. There's certainly been a lot of anecdotal evidence. Kohl's misses, Starbucks misses. Who else missed? Target has been a disaster. So the consumer side has been weak. Even on the corporate side, Salesforce said they're only going to produce single digits growth. That got clipped for 50 billion. I think there's definitely early signs in the economy that total demand is starting to really curtail itself. What do you think, Blake?
Well, first of all, I'm a believer that the U.S. economy is going to slow quite dramatically, actually soon. And it's the thing is if you're talking currencies, I believe that U.S. exceptionalism story that's been so prominent in 2023 and 2024 is not going to be that way for the remainder of 2024, maybe even to 2025. We are starting to see stabilization in like the Eurozone somewhat, even in the UK, and I think the dollar is starting to reflect the risks that are associated with the U.S. economy. And I do believe that, like I said, I think you're succinct in saying that this week is probably that week where we really start to see data slow. And we are seeing anecdotal evidence, in different places, and maybe some leading indicators that may be suggesting that when you talk about, savings rates dropping, falling to negative from where they were post-pandemic levels, all that leading macro data is already starting to take us there. And one other thing I should mention, our jobs market has been flooded with secondary jobs like inexpensive labor, maybe blue collar type of work. So those are the jobs that really can be cut quickly from an employer point of view. I know plenty of people that have had good jobs and they have not been able to get those good jobs back, and then they fill the hole by having a couple, working a couple part-time jobs. Right. And there's a lot of that going on, and so if we go into a cycle where you start to see job losses here in the U.S., they could come pretty quickly as a result. When we were creating a couple 100,000 jobs, we could slip into negative territory really fast on that alone. So
right, Austin, you and I are both technology aficionados. What do you think about the impact of AI on jobs, on the job market? It's early, but I can't imagine that it's not going to be just a slaughterhouse in a lot of different ways. I mean, we can write a legal contract between you and I in 15 minutes on GPT now. That's going to be better than most lawyers.
Yes, but I think I play both sides of this argument. This is a podcast in itself, man, because I can understand the people that are going to say AI is going to take every job in the world. I can kind of see that. And I can see the people that are like, yeah, but a human still is going to need to be involved in some capacity. So it's a very tough conversation, especially when you're talking to somebody that knows nothing about computers. I know you do, but I don't. I don't know nothing about AI. I don't know nothing about computers, but I know every analyst and their mother is saying NVIDIA is not a bubble, which makes me think maybe there is a little bit of a bubble here. So that's all, that's about as far deep as when the analysts tell me one thing, I always consider the other thing. So that's my read on the technology. But you know what? What's going to be cool, as we've seen with many technologies, you guys, like you mentioned already, Blake, you traded through the .com bubble. A lot of companies that had good technology potentially didn't make it through. So just because you have good technology doesn't mean you have good management in your company and good leadership and someone that knows how to balance your books. So you could have the best thing, but you get gobbled up by a bigger company. So it's really hard to say, what does this look like? But you can definitely say AI is not going anywhere. And whoever can build the best, smallest, fastest chips is going to be the winner.
I'll tell you a funny story. So, I do a lot of ChatGPT work. I design a lot of our trading view indicators and strategies using ChatGPT. And I've gotten to the point now, talk about anthropomorphizing technology, where when it does a good job, it actually, I've learned how to give it direct instructions to make sure that the code comes out perfectly. I actually say, good job, like I do to my pet. and it responds back to me, and I'm like, I really, we're really getting to that point where we're going to start to anthropomorphize our technology, like
100%, 100%.
It's very funny. Anyways, given that, so we're coming into NFPs. It sounds like I don't know, Austin, what your view is. You think it's going to beat? You think it's going to be at
I was going to chop in on that just because I totally understand where Blake is coming from, and he is definitely, like I've said many times, more experienced than me. I think there's something to look at though before the NFP. We have a potential rate cut in Canada coming tomorrow, and then we have a potential rate cut in Europe coming on Thursday. Those I think actually could be more impactful for this trading battle specifically, even than anything else. You're going to see two major central banks cut rates. In the U.S., they're not cutting rates at least until December, and so I don't think they're cutting at all this year.
Well, this is going to be interesting, given the fact that Blake is actually long euros, right?
Yep.
And you're kind of confident on the rate cut. What and that you're running with this thesis. What are you going to make him do? What's your sabotage trade to him? Given your view,
I'd like to see him trade NZD CHF. New Zealand dollar, Swiss franc. I'm taking him away from the rate cuts. I'm taking the volatility away from him because I don't want it to hurt me. So I want to put him in something that's going to get him stuck.
The most boring pair in the world.
Yep. That's my sabotage. Because Blake knows how to trade, bro. I got to slow him down. I can't hurt this guy. I need to slow him down. I'd like to see him put 2 or 3 lots on it. 2 or 3 lots, Blake. Something heavy.
Which direction? Which direction are we going?
I'd like him to decide the direction. I don't want to. All right, good. See, I don't.
Well, you can't decide direction, Boris, because
I can't decide direction.
What other decision do I have left? I mean,
Right. Yeah, he's got to.
That's the whole point of sabotage trade. You are at the mercy of your opponent.
That's silly. That's silly.
Are you long or short, Blake? What are you thinking?
I'm gonna get long, and here's the reason why. And I'm glad you brought this up. We had Swiss CPI come in overnight, came in a little hot. You had Jordan, a week or two ago? Actually, it was 2 weeks ago. He was in Japan. He basically put a stop to the Swiss weakness. But I think the ball has already been rolling. So here we are at the 38% retracement. We're also at the breakout point. Now, how many lots did you say I have to trade?
2 or 3.
Two or three is good.
Well, how about I'm gonna go 3.
Cool. I think that's a better idea, especially because it doesn't move a lot, right? This thing, what's the distance on this on an average day? 50 pips, maybe?
Yeah, well, here's the thing. I think we're going right back to highs. So I would put, let me move this order out of the way really quick. And let me do one other thing on this hourly chart, because I don't want it to extend past the 161% extension, which is going to be 54.86. So I can put a stop around 54.
Blake, while you're doing this, can I talk to you a little bit about your process? Because I noticed you do a lot of fib, using the fib tool to create targets and stops. Well, I don't know if you create stops, but you definitely create targets out of the fib tool.
Yes, I do.
Sounds like you've been doing this quite a lot. Can you tell me why? How's your experience been with that, and why do you find that to be a useful tool for projection? Versus,
well, first of all, Fibonacci's are in everything. Anything that and everything and anything that's natural, you can find a Fibonacci ratio pretty much in. Whether you're talking about the human body, whether you're talking about nature, seashells, do some work on Fibonacci. So what that means is it's ingrained in human DNA and the way that we all think. That's why when you're looking at certain levels, you're like, that pullback, oh, look, that price has come back enough. It looks like it's, you should be buying it here. Well, usually it's because it's at a 38% retracement, a 618. And then when things get a little too extended, we get towards 161% extension. That's the golden fib. That's when everybody's like around the same times thinking, hey, this has probably moved enough. I need to book some profits. But so what I try to do is I try to get in front of those levels, knowing about trade psychology and where traders are at, and basically how they're positioned. So therefore, I do end up using a lot of fibs as a result. So in this case, the 161% extension is below that breakout point. So I want to make sure my stop is somewhere down in this area. You can see it right over here. My stop is going to be somewhere down here. And I want to get long, and I'll look for a move back up towards 56 cents. I think that'll probably be decent. So there we go. And so I'm risking about $860 to make $3,000. And there we go. So
sounds good.
I'm long. So there you go. And so thanks, Austin. That was a great one. I appreciate it. You couldn't sabotage me. You can't do it. Just kidding.
All right. Now it's your turn. Now it's your turn to pick. What are you going to do? Make him go long NASDAQ into the non-farm payrolls?
I want you to go max long NASDAQ at the highs right now. Just no. Actually, Austin, I know you don't trade currencies, and I'm with you as far as it's funny when you said New Zealand, Swiss. I'm like, I already have it at the very bottom of my watch list. If you guys have, we're looking at my watch list. I must
say that of all the trading battles I've done, and I've done, probably close to 100 at this point, not one single person has ever chosen Kiwi Swiss as a trade. So we have a record.
You expect me to be like everybody else, Boris? Come on, you know me better than that, bro.
Never.
Well, I'm actually staying in that same. I'm going to stay in that same lane, and I'm going to hit you with the Aussie Kiwi. And the reason why is because we are stuck in the middle of a range. You gotta figure out which one of the Antipodean central banks is going to be better.
The world's most boring sabotage trades ever.
This is 100% a sabotage. Can I just show you why, and then you can figure it out from here?
Yeah.
It looks so bearish because it broke the 200 DMA overnight, but we are smack dab in the middle of the range, and I really think it's a 50-50 from here. So, Austin, you better just flip a coin.
Every Aussie Kiwi trade ever is a 50-50 trade. I'll tell you a funny Aussie Kiwi story before we get into our next thing. When I was at FXCM, my boss Drew Niff, who's a great guy, wonderful guy, great trader. But every great trader can be wrong. He used to love telling traders, hey, Aussie Kiwi, the greatest rate, it never goes anywhere. It's the best range trade in the world. You just sell the tops, buy the bottoms, just harvest money for years and years and years. Nobody pays attention to it. Great trade. And so everybody was doing it for a while. And then there was this massive divergence. This was like, I think early, like maybe 205, 206. Massive divergence between New Zealand and because what happened was, I know what it was. China started to really put money into Australia. Australian rates went through the roof. Australian economy went through the roof. I remember there was a time in 2010s when the Australians were coming to New York and were like literally buying empty suitcases to take stuff back.
I remember that. Yeah.
Remember that? So Aussie Kiwi verticalized, it became the greatest trend trade ever. It just goes to show you, I think, about markets, that nothing ever stays the same. No matter how much history you have, no matter how much data you have, it can always be different and much crazier than you think. And that's obviously why you need to have risk control. But that was just a really interesting, he got caught on that Aussie. It became the greatest trend trade ever for like a year and a half, where I just think it went 1,000, 2,000 points without ever stopping. So much for range trading Aussie Kiwi.
Yeah, I can see the range you're talking about for sure, Blake. I definitely can. I'm thinking I want to be long. I just want to check one thing on this one.
Oh, aren't you already long? Isn't that showing you're already long?
Not yet. I have to click.
Oh, not yet. Okay.
Now I'm long.
No,
okay. Got it. All
so, yeah, I like the long. We'll take the long. I definitely see the middle of the range. I've got to stop 50 points lower, and we'll see if we can get some move to the upside here. I'm going to actively manage it, of course, but I've got to take profit in about 90 pips.
And Austin, why don't you, while you're there, can you show us your P&L? We just do a quick spot check. Obviously, the traders have a full week to close out their positions, so this is all very preliminary. I got to put on my glasses, my old man glasses here. So he's got the dollar yen trade is working nice. He's up $93, and now he's going to do the.
Hold on. Yeah. Wait, I clicked the wrong button. I was a limit order. Let me get market here. Sorry. Hold on. Dollar yen trade is $100 in profit. Yep.
Yeah. Nice.
Click create this 1 second, and then we go market. How many you want me to put here, Blake? What do you think? Same as you? 3, 4, 5?
Max. No, go 3. You might as well match up what we did.
Yeah. Okay.
All right. So now I'm three long as well on AUD NZD.
Okay. All right.
Plus 197 between both trades right now. Plus.
Okay. Plus 97. Okay. Sounds good. And where are you, Blake? Where's your screen?
I'm down 2 pips in the euro, and I'm flat
20,
with the New Zealand Swiss.
Yeah.
So actually, up 1 pip.
You're like $10 either way of break even. Okay.
Yeah, it's basically flat.
So we're quiet, and obviously this should be actually quite interesting over the next couple of days. We're going to get more volatility. This is going to be a big week. I think Thursday is ISM services, right? Thursday is ISM services. ISM is before the.
No, ISM services is tomorrow.
But tomorrow. So it's definitely before non-farm payrolls. So we'll definitely get the volatility there. Because one of the things about ISM, the employment component of ISM is always generally a good forecaster of non-farm. So if it really starts to slow down, I think you're going to start pricing in all that slowdown scenario that Blake is talking about. Before we get to our next final challenge, I kind of wanted to ask you. And Lee, we'll see if my producer has any questions from the audience. I'll be happy to post those for you. Anybody who's watching, feel free to ask us any questions while we're talking about this. But the question I wanted to throw out to both of you guys trade prop. We talked a little bit about prop. And there's 1,000 different things we can, like you said, we're gonna have a whole day conversation about all the nuances of prop. But one thing that I think people underappreciate about prop is, if done properly, or in other words, if you're trading your account to the rules of the prop, and the rules of prop are incredibly artificial. We all know that. They're very artificial, very difficult. But they are a tremendous, tremendous learning experience for anybody who trades. An experience in controlling risk and having the fortitude to stay with all the roller coaster rides of the trading. Would you agree? Like, I literally feel, having passed a few evals and trading a few prop accounts, I'm not really that much interested in making money on the prop side because I'm just frankly too busy. But I feel my skills of trading have really improved because it's like literally putting yourself into this intense boot camp, university boot camp of risk management. What do you guys think? What do you think, Blake?
Yeah, well, I'm gonna let Austin to talk in just a minute about this, because I know he does he does prop trading. For me, I've traded for funds, and I know what it's like to look for quarterly payouts, to grind it out, and that's the one. And then I'm going to speak from a funding point of view, and not putting ourselves at risk from a capital point of view. We try to teach traders how to grind it out, because in all actuality, when you trade for a living, that's what you do. You grind it out, and you don't. Yeah, if you're wrong, it's okay, but you don't want to stay wrong, and we don't want you to stay wrong. So it's all about the process of grinding out the markets, and that's longevity. Anybody that you talk to, anybody who's traded for institutional size like I have, or is traded for any length of period, even with my individual investors over the last 25 years, it's all about grinding out profits. Yes, you're going to have some good days. Right. Yes, you're going to have some sessions where you can, book profits and I'm going to go drink some beers and I'm done way early. Right. You're going to have good sessions like that, but it's all about grinding it out and keeping your losses light. We don't want you to stay wrong, but it's okay to be wrong, and that's why you allow for drawdowns, because my hit rate's at 52%.
Right.
Maybe
you have like a 1.5 to 1 to sometimes even 2 to 1.
Exactly. And I know how to book profits, and I know how to manage risk. If something's going against me and I'm like, it doesn't feel right, I'm going to take it off. I'm a trader. I can put it back on if I want to, just like any trader can. And that's it. You have to teach that process through prop. And that's why, there's a lot of traders that fail, because they just think it's like and you can lead a camel to water. You can't get them to drink. You can tell traders what they have to do. But the fact of the matter is, I can't tell you how many prop traders come in our doors and they're like putting it all on red. And it's like, what are you doing? And you get blown out immediately.
But that's fine. And that's to my point, Austin, is that people always put it on red. One trade. I'm going to make a video on this. I had 2 eval accounts that I passed. One was a 1 trade, just basically, let it ride. I took a news trade, worked great. I got passed. The other account, I'm not exaggerating. I have the Trade of 8 analytics for it. 1,000 trades, same target.
Jeez, good for you, bro. I'm surprised you haven't had a heart attack. Holy fuck.
I had about 3 of them, I mean, it's so like, you need to come to like, 53,000. I came to 52,999.26 once, 99.76 once, 99.01. So, but it was an amazing, it was the greatest experience of my life in many ways. And that's what I mean about, yes, you're going to take maybe 10 props and just blow them out like when you bet on red. But once you start kind of understanding it, I think, and this is to my point, and maybe your experience, I'd love to hear your experience on this. You actually, it's like taking golf swings. It's like taking tennis. I mean, I play tennis. It's like taking tennis swings. The more swings you take in the proper proportion, the better you're going to get. The strokes are going to get better. What do you think?
100%. 100%. I actually, I really like what Blake said about the atmosphere. I would say I tend to look at these things a little bit differently. I think I apply my entrepreneurial brain to it, and I'm looking at the bottom line. Right. I have no ego. I am not the perfect trader. I don't want to be a perfect trader. I just want to make money. So I don't care if I fail challenges. I've had enough experience. I've been trading for almost 10 years. I'm going to move through the challenge phase of the prop stuff as quickly as I can. And I'm going to then trade the funded stage like I would trade my own capital. And what I've been doing is I'm trying to build a base that I can pay myself monthly. And then what I decide to do with that money, whether I fund my own capital or I go on a vacation or I pay my bills or I go out to dinner, whatever, that's semantics. But my idea is use the prop firm not only for the experience, because I totally agree with you, Boris. It's made me a better trader over the last 3 years.
That's my
100%. 100%. But I look at it a little bit more as maybe not exactly this word, but it's gamified in a way where you have to follow their rules exactly. You can't trail draw down this and that. Blake, now some of these firms you cannot dollar cost average and add to losers or they'll deny your payout. So you have to play their game with the ultimate goal of like thinking further ahead of like, let me get this money and trade my own capital.
Okay. See, that's interesting. It's funny since we started offering prop, Austin, and I'm glad you brought that up. It's so we're pretty simple. Like we have a community of traders that we're all in a chat room that we've had for literally, some of my traders have been with me for 2 decades now that have been chatting with me on a daily basis. But we have a community of people that that they can talk and we can all chat about like what's happening in the markets and why we're shorting euros or shorting the stock market, whatever the case may be. But it's simple. You make 10%, you don't lose more than 6% on a trailing basis. That's just making people grind it out. You start throwing all these different rules. It's like, why? Why? Because we're trying to build.
You know why, Blake?
Yeah. Well,
I know why. It's just it's absolute shite, and that's why that's why you shouldn't be like.
It's okay. It's okay, guys. I want to call a timeout because we can have this conversation forever, and we probably will. And we may do it eventually because I may have some interesting. You guys know me for my Trader Fest, so we may have more fests coming on that. But for now, I want to focus on what you guys do because we have a little bit of limited time. Can you, Blake? Can you walk people through? What is the offer today for everybody who's watching us in the trading battle and all of their friends? Because both gentlemen have unbelievably great products. And today, as members of Trading Battle, we're going to make those offers for you in the comments. They're giving you some big discounts. So, Blake, what's the story with ForexAnalytix?
Sure. I guess I can just show you really quick. ForexAnalytix, it is a community. It's also a platform. And we do happen to have a summer sale going. We only discount our prices a couple of times a year. But the Trading Battle discount is for an annual subscription. And it's $1,000, which is a steep discount of what we do.
How much is it really? How much is the annual subscription generally?
The annual subscription without a discount is, let's see, I think it's $1,500 or so. Let's see, it is
really significant.
Actually, it's $1,800.
Right, so it's literally almost 50% off, which is an amazing deal. And they would get 12 months locked in of unbelievably rich analytics. I mean, it's not just one thing, it's not just 2 things, it's not just 10 things. It's literally more than 100 different things. Any instrument you can name, they have research on it. They have great technicals on it. They have fundamental.
You can see when I'm booking profits. I mean, I put my running positions.
You have your trades. You have your trades room in there. Wow, I had no idea you had your trades room in there. So people can actually Look at your trades as potential signal ideas and trade ideas for that. That's very interesting.
I try not to position it that way. It's like, but if you respect me as a trader and you respect my ideas, and I happen to be long the euro and you're short, you might go, hey Blake, and you can type to me, hey Blake, why are you short? Why are you long the euro and I'm short? So, but I want to mention one other thing that I'm throwing in here. If you guys are listening here and you use the Trading Battle 2024 discount code, the first 3 people to do that will get an hour time with me, because we just launched our coaching sessions, which I've been coaching traders one-on-one since the early 2000s, back at the Wise Trade group. So we are doing that now. Yeah.
That's truly great, because I got to tell you, Blake has a wealth of knowledge. I would take a one-on-one coaching session with him. So definitely worth it. Now, Austin, my friend, talk to me. What's the offer to the TTB viewers that you'd like to make? Austin, ASFX TV is, of course, your big brand, and tell us a little bit about that.
So ASFX TV is a live streaming platform that we started about 1.5 years, 2 years ago. It's very affordable. It's very simple, where you can tune in with us in London session and New York session, and you can watch myself and other prop funded traders trading live. So guys that have proven they can pass challenges and get payouts, we bring them on and pay them to stream on our platform to show other traders how to pass challenges and get paid out as well. So we have a 7-day free trial for everyone to come check it out. You get the whole week, plus you get to rewatch the previous streams as well. We're in the process of developing an app, not exactly how Blake has a web platform. We're going to actually develop a mobile app and a smart TV app, so you can tune in live and do the recordings all through your mobile phone or from your smart TV. So we're growing, and we're looking to add talent and add streamers as time goes on. Guest streamers and permanent streamers, all that. I'm just trying to create a platform that we want it to be positioned as like the Netflix for traders, where you can tune in and see a lot of reliable traders trading different strategies, but all having a track record of proving that they can get funded and paid out.
Right. I wonder where I would fit into that category. I would be like
you're in the dinosaur category, Boris.
No, but I mean, since my literally the average lifetime of my cycle of trade is 1 minute 10 seconds.
We would call it the scalping room with Boris, and it would be you.
Speaking of scalping room, guys, just a shameless plug for myself. In 15 minutes, I'm going live on YouTube at BK Traders. So you want to look at scalping? I'll definitely. The one thing Austin knows, I make trades.
Boris, I need you to come on ASFX TV and show everybody one day, and we'll clip it. We'll put it on social. I'll bring you on, and we'll do it. It'll be fun.
I don't talk trades. I make trades.
That's good. I like that.
Make good trades, but I make trades. That's for sure. I don't shy away. Anyways, we have one last final challenge, because we want to trade the index of your choice and the direction of your choice. So I'm going to leave it first to Blake. What index do you like or do you not like? And what would you like to do with it? Because this will be your third and final composition of your portfolio now.
Well, I believe we are gonna sell late May and go away. So I'm actually gonna be selling, some Russell. I want to prey on the week link. And
wow.
Why? Because it's
I'm saying wow, because almost nobody trades the Russell, and you really are preying on the week. You're just.
I mean, let me make sure I'm going to keep my stops in order. I want to make sure that they are. I'm going to actually put my stop in above 2110. So 2110, up one more, just. There we go. That'd be fine. Just above like this week's highs, basically. And I'm going to look to take profit around the 1950 level, around the 200 DMA. Whoops. Keep typing the wrong spot. Hold on. I don't use this platform normally. So, and believe it or not, in my Oanda platform, the trading view application is a little bit different. So
it is.
I would like to get out ahead of there.
It's thousands of ticks.
Yeah.
That's it. You got it. Just everybody.
Yeah. So I'm gonna risk about 1,200 to make 1,600 here. Actually, I'll just go a full 2 lots, and just because I know we're only trading a $10,000 account, so I don't want to over leverage myself. So I'm gonna risk 1,300 to make 1,800, and I'm going to get on the short side of the Russell 2000. I want to prey on the weak markets, and Russell has really been underperforming. I think if we're going to turn, the Russell is going to be more of an easy slide lower. You could probably get a little bit better beta in shorting NASDAQ, but I'd rather be a little bit more safe, trading something in a range rather.
We're gonna go with Grandpa Russell. What are you, Austin? You being the
that's you and me, kid.
I got my glove on here, so you know we're in a battle. So I'm not going to short the markets. If he's short, I'm going to clearly take it long. I'm going to take it SPX 500 long. Okay. I would love to see us reclaim all-time high VWAP today.
Wow! Whoa! Broad statement, bold statement. Let's see.
Yeah, I mean we're close. We're close. I said it at the beginning of the stream. I need a catalyst, and I totally understand Blake's position, but I'm going to take the other side of it. I'm going to take a long. I'm thinking here on SPX. I'd like my stop at yesterday's low, Monday's low, which I'm hoping is going to be our low of week. And I'd like to retest highs from last week, Tuesday's high of last week. That'd be up near like 53.30, somewhere up there, 53.20. So $1,400 a risk to make maybe $2,200 I think that's pretty reasonable. So we'll be long 4 contracts. Oh, wait, I got to do a market order. Hold on. 4 contracts there. Market. 4. Cool. All right. We're in.
Beautiful. Nice. Wonderful. Okay, guys. So we have all the positions all set. Now, everybody who's watching us, I hope you guys really enjoyed it. This has been one of my most enjoyable TTBs. You can see the amount of knowledge, the amount of skill that these guys bring to the table. If you like this content, absolutely be sure to subscribe to the channel, because every new battle that we have, you're going to get notified. Let your friends know. I think this is hopefully one of the more interesting trading contents on YouTube. We put this together for you guys. We're going to have one next week. I'd love to see you there. So be sure to subscribe. Other than that, gentlemen, it's been nothing but a pleasure. This is Boris Schlossberg for the Trading Battle. Over and out. I'll see you guys in the markets.
Gents, see you often.